I was living check to check. I was going out, drinking beers, eating out with friends, and I felt like I wanted to live a better life. 2020 was kind of like dipping my toes in the water. 2021 was me fully grasping what I'm doing in the market. I didn't know it was possible to just make this amount of money in the stock market. No one saw the struggle leading up to that point. And I think it all comes back to just knowledge. You know, if you don't know it's possible, then you don't think it's real. I love the idea of companies paying you just to hold their stock. I didn't foresee myself doing this. I didn't foresee my portfolio performing the way it did. Ultimately, my thesis whenever I buy stocks is, do I use the product? Can I foresee revenue growing? And do they have a moat?
Investors, welcome back to Masters of the Market. This week, I'm really excited to have on Masters of the Market David Garcia, an investor that I actually stumbled across on X, but he has a lot of incredible content, also a YouTube channel, but just like all of us, the average Joe investor. So David, I want to welcome you to Masters of the Market, and I just want to get started and pass to you the first question, which is, what exactly is the David Garcia story?
Thank you for having me onto your channel. It's an honor. The David Garcia story, I guess we can go all the way back to college. I was just learning about equities. I understood that, yeah, you're buying a portion of a company, shares of a company, right? Kind of didn't grasp why a stock goes up, down, sideways. So they had given us in college a paper money account, and we're trading, and I was just buying Apple and I didn't understand why it was going up. I just knew it was going up. Later on in the year, I tried to open my own account, but this was back in the day when it was commission trading, right? So every trade I made was $25 or $50, whatever the fee was. And as a broke college student, it was almost impossible for me to build a portfolio. And then towards the end of my college career, I guess you could say, Robinhood came out, and I signed up. And by the time I got it, I was already not thinking about it. I had gone from being interested in investing to want to just hang out with friends and just going out all the time, every weekend. And over the months, I realized that I was living check to check, right? I was going out, drinking beers, eating out with friends, and I felt like I wanted to live a better life. And I guess that came to me starting to sell things in my apartment that I didn't need, and I was able to build up enough money to max out my IRA. And my first ever investment was a what do you call them? It's a mutual fund, a target date mutual fund. There you go. And it was okay, you know. It wasn't really performing that well. And then came 2019, I started getting interested in Tesla. There's a bunch of buzz, and I was like, whatever, I'm just gonna dump it into Tesla, and it skyrocketed right at the end of 2019, and I was like, oh my god, this is easy. And then 2020 came, and sure enough, everything started crashing, started freaking out a little bit, and I started my taxable brokerage account with Robinhood. I kind of let the Roth IRA take a back seat, and I just started dumping money into that. I really started putting my dedication into investing. At first, I didn't know what I was doing, right? I had Tesla just because there was a lot of hype around there. And then I started buying Roku, and I have, to this day, no reason why I bought Roku. And I wanted to learn more, and that led me to YouTube. So I've always watched YouTube. I loved YouTube my whole life. I've done many YouTube channels that have not panned out. And I just landed on a channel called Andre Jick. I don't know if you know who he is. Andre Jick opened me to the world of dividend investing. So then I'd let Tesla take a backseat, and I started buying all these dividend stocks. I would say that I fell into the fallacy, though, of buying too many companies. And I was copying his portfolio, and I didn't understand why I was doing that. I learned that my Tesla position was outperforming my dividend portfolio. And I ultimately was buying more Tesla. I was letting the stock ride up. And I was also still trying to buy dividend stocks because I loved the income. And I love the idea of companies paying you just to hold their stock. And I think it's just like a great way for passive income, I guess you could say. I was at the point where I really wanted passive income. I wanted to quit my job and just live off of that. But I also was just in love with Tesla. I loved Elon as well. And so basically I had like a balanced portfolio of Tesla and a lot of dividend stocks. Towards the end of 2020, I was also building up a Bitcoin portfolio, and I was trying to build it up. I think my average cost in Bitcoin was around $5,000. So it wasn't really much or really that expensive for me to buy. Now it's crazy, right? It's like $100,000 or something. I think right now it's like skyrocketing because Trump just said that there's going to be like a crypto reserve. So then at the end of 2020, I had Bitcoin, Tesla, and a bunch of dividend stocks. And I had no idea why I had all those stocks other than they're really cool. I really liked them and I liked getting paid passively. So then that leads me to 2021. Everything is continuously skyrocketing. And I felt like it was just easy money. You could buy a call option, you could do anything, and your money's just growing. And I think I would say my Tesla position was probably up a few 100%. All my dividend stocks were up like 30%, something like that. And the income was flowing in. My crypto portfolio was more than like 300%. I don't remember exactly what it's at because I ended up selling and paying for a wedding that I had and buying a car, which was also a mistake. Learned from that definitely to not buy depreciating assets. But that ultimately led to 2021. I was starting to figure out the best way to invest, right? I would say that in 2021, that's where I kind of developed in the stocks that I buy, I should really think, do I actually use this company on a daily basis? Do I understand what they do, how they make money, and how that makes me money? 2020 was kind of like dipping my toes in the water. 2021 was me fully grasping what I'm doing in the market. And I'm grateful for all the other investments I did. I would say that I was definitely lucky, right? It wasn't something that I planned and I knew Tesla was in a 10x or whatever it was and Bitcoin was in a 5x or whatever it was either. I definitely got lucky, but 2021, I definitely honed in, kind of strategized. And I would say that I learned a lot from channels such as Joseph Carlson. He talks about moats quite a bit, and that really resonated with me, right? Like, why am I invested in a company that does not have a moat? And if I don't use the product personally, how do I know if it's even good? So then I've stuck with that mentality since then, and it's panned out pretty well, right? So I've stayed in Tesla. I know it has a rocky performance, but I have a long-term vision for it, multiple avenues of revenue. I'm also invested in Google. I love YouTube. That's on my X profile. It literally says I love YouTube and investing, and I have a long-term vision for that as well. And another stock that I had gone into was Robinhood. I think I love just the way it got me into investing, and I think a lot of investors can also resonate with that. Yeah, ultimately my thesis whenever I buy stocks is, do I use the product? Can I foresee revenue growing? And do they have a moat? So I guess ultimately my investing journey has been a learning experience, not only in personal experience, but also listening to YouTubers such as yourself, Ari.
Where I want to go back to, first of all, you asked two incredible questions, at least to yourself, like before you're about to invest in a stock, which I want to circle back to. But I have this pressing question for you. Back when you were in college and you were kind of given the paper money and you said you started to invest, yet there were fees involved with investing, and so you stopped. But you were, from what I understand, and correct me if I'm wrong, you were able to generate money while in college and continue to invest for some period of time?
So the paper money was with the class gaming, and then on my own time, I opened a brokerage account. I believe it was TD Ameritrade, and I think they had, or I think it was E-Trade or TD Ameritrade. I forgot which one it was, but they would charge $25 a share or a transaction, and because of that, I did not invest in college. So
Okay, so you didn't actually invest in college, but you opened up
no,
the account, put some money in.
yeah. And
Okay.
and when I saw that, I was like, okay, I only put in $50, so I had to basically 100% my money to make that feedback.
I guess the follow-up question there is, do you regret not putting money in then just because of the fee?
I do regret it. So I feel like the sooner you start, the better, because you'll learn all this stuff I learned over the past 6, 7 years, right? I'm 28 years old right now, about to turn 29. So I've been investing for quite a while. And like I guess I was getting into is that the beginning, I was very, very green. And it took me a couple years to kind of grasp why I'm invested into a company. And when I speak to people, because I guess how you could say it is people like you and I, or like your viewers, if they're not already investing, they're kind of like lost, right? They're like, what is this? Why am I investing in this? If you tell them what an ETF is, they're still not grasping it. And I know this because I have employees at my company and I tell them, okay, I got a retirement plan for you guys. I'm going to provide a match. I need you guys to invest in these things. And they're like, but why? Right? And I try to explain it to them, but I think the best way to learn is by delving into it themselves, dipping their toes themselves like I did. And I guess I like to call it the school of hard knocks. Basically, everything I've learned right now is like school of hard knocks. I know I went to college, but I feel like reading it from a book and being taught it is completely different than being hands-on.
Sure. I was going to say the best experiences in life are like when we actually experience them, or yet the best degree that
Exactly.
you can earn is through experience. And I often find that with a lot of people who jump on the show. It's like I learned all my lessons through actually trial and error, which is exactly how I learned. And you can read as many books as you'd like, but the real test is when your feet are actually in the water. Now, for you, when you started investing, okay, so Robinhood comes out, and
Hmm.
of course, we all know what happens with Robinhood. It kind of opens the floodgates for the average Joe investor, gets rid of the fees, and then your story takes, I feel like, a pretty audacious jump into the water, into the world of investing. When you first started investing and you threw your money into growth, right? Tesla, and you started going towards those stocks. What was kind of the impetus for yourself to jump into the market? What helped you overcome the fear? Because if we're just speaking frankly, so many investors have that initial fear of losing their money. But for you, it almost was the opposite. Like you knew you didn't want to pay the fees, so you didn't do that. That makes
Hmm.
sense. But you didn't really have the fear. You threw a ton of money in, started working and threw a ton of money in. How'd you overcome the
So
fear?
I did not have the fear because at the time, I wouldn't consider it a gambling addiction, but I was gambling pretty heavily. You know, I would literally fly to Vegas for a day or two, and I would win like $5,000, $10,000 and fly back.
Were you counting
And I was,
cards? Like, what's the trick?
I don't know, I was just like, I guess it's beginner's luck because recently I've been losing quite a bit, so I stopped playing. But I was winning, and I guess like I put into stock market, and I didn't know the ins and outs, like I mentioned. And the stories are, oh my God, you lose your money in the stock market, which is completely not true, right? You don't lose your money. It's the only way you lose your money is when you honestly sell or you choose the wrong stock or whatever the issue is. But typically, you don't lose money in the stock market over a long period of time. That is. My risk tolerance is I like it risky, but I don't go into margin and I don't really do that many options. In 2021, I was just trying options, but I didn't do like a lot of money. It was just an option here and there, and I was like, wow, this is easy money, but how long can I trust that? Or how long can I predict the market, which is not predictable. I didn't think that we're going to be red this past week. I didn't know that. I thought we are just going to keep on smooth selling, which we might. We don't know. We'll see how Monday turns out, right? We're filming this on the weekend. But yeah, I have a high risk tolerance when it comes to investing. But I would say that over the years from 2021 going into 2022, I've mentioned this on my channel, is that, yeah, like I've made great trades throughout the years. The first 2020 and to 2021, maybe I wasn't as strategic. And I've learned the hard way because I have massive tax bills from doing those short-term gains, which is another thing I'm still trying to learn is be a little bit more strategic when it comes to that. But over the years, although I have been lucky, I've kind of shifted to where I want to buy more ETFs, honestly.
I have so many
So,
questions, even just around
yeah,
the trading aspect, because
yeah,
what I often hear from young investors is, "Oh, I'm going to jump into the market and I'm going to invest," which they're really ultimately trading because they're every other week jumping in and out of positions. I have some good friends of mine who are 100% all in on trading, which to every investor their own. I don't really care how someone's making their money as long as their
they're
scoreboard, if
making
you
money.
will, is green. Yeah, they're making money.
Yeah.
But the one question I do always ask is like, well, what do your taxes look like? And then I kind of get this dumbfounded face back. So I want to ask you, because you're also 28 years old, young investor, and you were, in I guess the groove of trading, and then you started looking at taxes. Was it the tax? Do you do your taxes by yourself? Like, how did you get a grip on understanding? You
So,
know what? Maybe
yeah.
I should pull back on all the day trading.
So I do my taxes myself. I'm a super huge nerd and I like to do it alone. And maybe maybe as my I guess my tax return gets a little bit more complicated, I'll get a CPA. But when you're dealing with a W-2, for example, or self-employed person, I mean, there's not really that many things, or that many transactions or tax loops or anything like that that you could deal with. And then when you're getting a 1099 from a brokerage account, or you're getting 1099 from your vendors, whatever the case is, it's pretty straightforward, right? At least in my opinion, it's straightforward. Like I mentioned earlier, some people it's not as straightforward, and it's learning the hard way. Ultimately, gaining experience. And going back to your question, yeah, I mean, like this year, I guess 2023. I don't mind saying the numbers. I have, or no, 2024, I mean, I don't mind saying the numbers. It's like 60,000 in gains that I've realized short term. So that's a massive tax bill when also income is pretty decent right now as well. And I sold, I guess we can also delve into that too, is the reason why I sold is not that I wanted to get out of the positions, right? I love the positions I'm in, and the strategy I developed in 2021 that I mentioned to you was, do they have a moat? Do I use the product? And do I foresee them continue growing? Typically, when I choose a stock, I'm trying to stay in it for the long haul unless new information comes about that they're not growing anymore, such as Apple, for example. They're not growing at a 10% annual revenue. But no, in my case, I was selling to get into other investments that I had mentioned to you offline, that I'm in private equity. I'm also in real estate. And I guess looking back, if I hadn't sold, I probably would be outperforming the real estate deals I was in, honestly. I was only doing real estate because I wanted to dip my toes in it. I wanted to learn more because every time I see a deal, I'm like, I don't see how that's better than stocks, honestly, or equities. But I just wanted to learn it the hard way, just like how I learned everything else. And yeah, I think after I sell my real estate portfolio, I'm definitely gonna just stay in stocks, honestly.
David, where does that persona or kind of willingness to risk it all, or just risk in the first place even come from? Like you're like, you know what? I just want to dip my toes in the water. I'm just going to experience it. Like I said, it's pretty unique to have that, just based on the amount of people that I've spoken to, when it comes to the stock
Mhm.
market and finance and any type of investing. It's always this pushback of, yeah, well, I don't know, but you don't seem to have that. It's like a fearlessness. So I'm curious to know, was there anybody perhaps, in your family you looked up to who is in the world of investing? Was there, a teacher, a professor that you've had that kind of led you along the way?
So, okay, when I was growing up, my family did not have any financial literacy, right? I didn't have financial literacy. I had to learn it on my own. If anything, out of both my parents, my mom was kind of the saver, didn't want to spend on anything, versus where my dad was the spender. And I would say while growing up, I kind of learned from my dad. So I kind of grew up as a spender. And that was another reason why I would sell equities, was to cover my expenses, I guess you could say, right? So I've learned the hard way, I would say, over the past 7 years. Gotta not sell, stay in the equities, don't overspend, stay away from a credit card because you can easily overspend. And I've tested it. I've watched Dave Ramsey, I've watched all these people. Some people say, yeah, if you just stick with a credit card, just manage your spending, but it's not that easy. And sometimes, or not all the time, I've tested myself. Credit card, if you're using that, you're going to see a bunch of cash in your account, and in your credit card, you're not seeing all the cash, I guess, come down that you're utilizing. So then you feel like you have a bigger safety net than you actually do. So when I tested it, when I used debit card, I completely spent way less than a credit card. Um, and I guess that's the only advice I would say to people that keep on going through that loop of overspending and they want to get ahead, and just stay away from a credit card, honestly. Uh, but to further answer your question, I do have a mentor. He's my stepdad. Uh, he went from being extremely poor to now being multimillionaire, having multiple businesses, and I've learned a lot from him. And he's still teaching me to this day. I have my own business, and he's showing me the ropes, how to manage employees, how to bring on key people to continue to succeed. We never really talked about equities. I mean, he's not a major fan of equities. He'd rather be an entrepreneur and do everything himself, but he is a big real estate guy.
I want to ask you about your business just before we get into all the stock talk. You're
Yeah.
28. Talk
Yeah.
talk to us about that. Like, what's it like owning the
So
business? What is the business, and how did it get started?
so I have two businesses, right? So one of them is like a payroll bookkeeping business. And I came about that because I was just doing my own books and my other business. And I was like, you know what, I'm going to start doing that for other people. And then I also realized that in my work line, which is healthcare, we have to do cost reports on an annual basis, which is kind of like a tax return. But these cost reports, they require hefty fees. So I was like, well, I could do this. You know, I'm just going to start putting my name out there. And sure enough, the clients started coming in. So around April time, that's when a lot of my revenue comes in for my payroll bookkeeping business. But yeah, essentially that's one business. So the other business is home health and hospice. So the way I got into that business is that my mom also is a business owner. She has a non-skilled facility, and realizing that, I was like, okay, well, she has a kind of a big census right now. I would like to open my own place so that I can kind of like refer myself to from their agency, if that makes sense. Started the home health hospice has definitely been a challenge over these past 4 or 5 years, and it's not easy. Definitely not easy. It's tough work. It's honest work, and you know the families, the patients, they always come first. And I guess I've learned a lot. I don't know what else to say to that. I don't want to give too much on my
Sure.
experience because it's tough.
David, you're 28 years old. I mean, I think we all need to learn from you. Yeah. A lot of
Yeah.
us, look, there's so many people. And again, I'm talking to a lot of people, whether it's, on the streets, the cafes, whomever. And a lot of the times I just hear, oh, I don't have the money to invest. Or, one day I'm going to invest. Or I hear these audacious goals from people, right? One day I want to be a millionaire. I want to ask you outright, what's kind of the secret sauce to getting started, whether it is starting a business, whether it's jumping into the market, whether, it's just simply investing? What's the secret success sauce?
Ari, you kind of mentioned it already, right? To me, it's just me taking the risks, taking the jump. And it seems like a lot of people are scared or they don't know where to start, which that's how I was. I was in college. I was like, I don't even know what I'm going to do. I didn't foresee myself doing this. I didn't foresee my portfolio performing the way it did. I didn't foresee myself getting into real estate. I didn't know. And it all comes back to knowledge. There's this person I follow and I've spoken to personally, Brennan Schlackbaum, I think his name is. I don't know if you've heard of him, but
No.
he's a personal finance YouTuber, and he always preaches buying courses to gain more knowledge, right? And I kind of agree with what he's saying. I mean, before all this happened, I didn't even know it was a possibility. A lot of people say, oh, he got lucky, or his family's rich, or he inherited the money, but they didn't see all the struggles leading up to where I'm at right now, if that makes sense, right? They're just seeing David's lucky. He's already there. Someone gave him the money, whatever. But Brennan, he also says the same thing where, he has a $3 million net worth, but no one saw the struggle leading up to that point. And I think it all comes back to just knowledge. If you don't know it's possible, then you don't think it's real. Like I didn't know it was possible to just to make this amount of money in the stock market, for example. I didn't know it was possible to wake up and your portfolio is up 5% or whatever. And yeah, it may not seem like a lot to people in crypto, or it may not seem like a lot to some people, but as you continue to build your portfolio, 5% is a significant amount in a day. Um,
You think about money sitting in a bank account, like depreciating. Yeah, 5% is a lot,
Literally,
you know?
yes, exactly. And I actually was I actually have a hot take when it comes to investing in the stock market.
So
A
we'll
lot,
brace ourselves.
well, a lot of people have this, uh, I guess, this idea that the S&P 500 only does 6 to 7%, but I completely disagree. And they like to say that number or throw that number around because they like to include inflation. Um, but if that was the case, why don't you include that with all your other investments, right? It will completely change how you look at every other investments. It's just a way to keep yourself out of the S&P 500, I guess if you could say, or the total stock market. Yeah.
All right. So first of all, I'm going to start. We're going to start, from the macro and keep zooming in here.
Yeah.
Your portfolio right now, ballparking where you're sitting, and take out, we can take out the real estate and everything else, the businesses. Where are you sitting right now in terms of your portfolio?
So my stock portfolio is not massive right now. I'm sitting around 700,000.
Okay. And
Yeah.
then into real estate and obviously everything else that you have.
Real
I mean,
estate is about a million right now.
wow,
Yeah,
28 years old. And this is
yeah.
where I come around to say, like, it can be
That's my
done.
equity, not just holdings. I'm just saying that's my equity in it. Yes,
Sure, sure, sure.
because people will say in the comments, "Oh, that's just his house, and then he's not including the mortgage." No, whenever I talk about numbers, I'm talking about equity and whatever I'm in. Yeah.
Okay, so David, we have a bunch of viewers out there who a lot of them are new to the market. We have experienced investors, but I'm going to start with the beginner questions for you and just kind of ask you, okay, you got a beginner investor, they want to get to where you are, to that seven-figure club eventually. Where should they start and how should they approach the market?
So I definitely advise everyone that gets into the stock market to start with ETFs, whether that's VU. I always recommend VU because it's a low cost S&P 500 fund. Um, and the only reason why I recommend that is because you need to start getting used to the fluctuations or the volatility, right? It's not that volatile in my opinion because I've been in more volatile things such as Bitcoin or Tesla. Um, but it's just to get over those nerves of I might lose money tomorrow or I might gain money tomorrow. Once you gain that experience, and you need to start thinking different, right? You need to start thinking like, okay, every single day I'm brushing my teeth with Colgate. Well, who's the owner of that, right? Let's dive deeper. Or I use the shampoo every day. Who is that? PG, P&G, whatever. Um, so things like that, and um, that's how I would start. And when it comes to getting more money into the market, I would say you got to do side hustles. Honestly, we're in the day of age where inflation is sky high, prices are just skyrocketing. I really don't know how everyone does it. Even I struggle sometimes to maintain the budget. You know, I'm not the best at budgeting, like I mentioned to you earlier. That sometimes I have to sell my portfolio to meet some expenses. Um, but you definitely need a side hustle in this day of age. Get a
So,
bigger shovel, essentially.
of course, yeah, I always say feed the fire. It's like the most important thing that you could do. Just keep feeding the fire.
Yeah.
Now, when it comes to investing and trying to find yourself as an investor, I call it the investor profile. And you're saying start with ETFs. Now, you ultimately started with, I mean, some real growth stocks that, as you shared, it was luck. I feel like for a lot of people, by the way, it was luck. Even Elon Musk would say Tesla was luck. If you've read any of the
Yeah.
Musk books, but so you invested into Tesla, and then you had some risky bets in there as well. The question for you here is: now you're a dividend investor. Why not start with dividend stocks? Do you recommend that? Do you recommend people dabble in some growth, like just growth?
So So yeah, like in the beginning, I did do dividend stocks, right? Like I mentioned, Andre Jick, and uh, I was in Tesla. I would say like Tesla's probably 50% of my portfolio, and then the other 50% was strictly dividend stocks, where I was trying to build an income stream. Um, and I guess in my opinion, like dividend stocks works. It just really depends on your income, right? Like so, if you have a high income and you're making a massive shovel into dividend stocks, and that's going to kind of impact you tax season comes, right? It might be best to just do a growth fund or do growth stocks, and growth stocks are kind of hit or miss, right? Because they could underperform or they could also outperform. But I would like to maybe stick to SCHD growth fund, something like that, where over the long term you're going to be performing 16, 17% a year, and then you hit long term capital gains, and you're kind of sitting sweet, transitioning back into dividend stocks.
Now, when you're picking stocks, are there any specific metrics that you look into? Okay, you were brushing your teeth, you got Colgate or some deodorant, and we're going Procter and Gamble or whatever is in your fridge or
Yeah.
wherever. Um, what metrics should we look at? Should we be looking at metrics, or is it really just, hey, this company's been around for decades, it's paying dividends, it's got a strong yield, that's it?
So you know, typically when it comes to metrics, and strictly when we're talking about dividend payers, correct?
Correct.
Okay, so when we're talking about dividend payers, I would look at the yield. That's kind of like a telltale saying like, hey, if this payer is at a 5% yield, more than likely they're not in the growth phase anymore. They're kind of in the maturity phase. Um, I guess a perfect example is Google. I think they're under 1% right now, dividend yield. We know that they're in the growth phase still. They're still growing over like 10%. I think it's like 15% or 20% that they're growing year over year. Um, Personally, I would prefer young investors to do dividend growth more than high yield because you're going to need that growth in the long term. And then once you're of age, where you kind of don't want to work anymore or you're kind of going for fire, I guess, those yields are probably going to be higher. They're going to outpace inflation. They're going to pay you bigger distributions. Um, but yeah, I guess the yield is kind of like a tall tale, and the debt levels also another factor. I mean, if they have 50% debt and then they're also paying out 40% of the revenue or their income, I mean, as a dividend, I mean, are they really safe? I guess in the long term, could they outlast a recession? I'm not sure. I rather invest in high cash businesses such as Google, Apple, Microsoft. They also have a dividend. I know it take a lot longer to reach some of your goals, but um, safety is kind of like important long term, right? And I know safety is kind of weird coming from me when we're talking about me having high risk tolerance, but uh, I would hate for people to be in a position where the company cannot pay their dividend and you're depending on that dividend. You know what I mean? So I guess that comes to just having a balanced portfolio at the end of
So
the day.
many investors, and I've taken a pretty big hit on YouTube because earlier on in my investment journey as well, I was going for the Procter and Gambles and some of these companies that are like the prime, J&J dividend stocks. And honestly, again, through trial and error, right? It's like, okay, I could keep investing in J&J, great company, amazing balance sheet. Likewise with Procter and Gamble and a lot of these other dividend stocks. The problem is I realized my investor profile, and it was like, man, you got decades left to go before retirement. Not only that, but you got to aim for these, as you shared, companies that are in their growth phases and not maturity phases. So there's a lot of investors though that would disagree with us. What would
Yeah.
you share with them?
And it's funny that you mentioned that because I did watch that video where you're changing your investor profile. And I completely agreed with everything you said in that video. I learned the hard way too. I mean, I was in PG also. I was in J&J. I was in Abbott. I was in AbbVie, Um, but, we have such a long way to go. And I think it comes back to just taxes, having a tax strategy. You can't just go in there blind. Um, if you're just buying kind of like a more growth approach and you're still getting that dividend, it's going to be better for a young person long term, right? And I guess we can also bring it back to what my first investment was, a target date fund. In the beginning, it's going to be more risky, but as you age, you're going to start getting more income based investments, right? And and if someone's like maybe 40, 50, then yeah, I'd probably recommend doing those more mature companies such as PG, J&J, Coke, Pepsi, which I love Pepsi. I love that stock, but it's just not. It doesn't fit my portfolio profile, like you say.
I think that's the most important thing is and I keep saying it almost in every video now, but it's like we got to get real with ourselves as
Yeah,
investors. Like look ourselves in the mirror and say, well, here's my plan. Are the stocks that I'm investing into actually going to get me there, or is it like am I chasing dividend yield to get a dividend paycheck that I don't necessarily need right now, or
yeah,
to actualize that capital?
yeah, and I completely agree with what you're saying. I mean, there has to be a plan, and yes, some plans will take you longer than others, right? And it's just totally up to the person how they want to do that plan. Me personally, my approach is growth. Then I'll transition to dividend stocks. And if you want to just stay in dividend stocks, just do it in your retirement accounts. Where it's like taxable advantage for you. Um, I don't know. That's just my opinion. Everyone else has their strategies. Um, yeah, I think if you really plan it out well, you'll probably do something similar to what I'm saying. Growth, then transition to dividends, and you'll be sitting pretty nice in on your stash.
So, David, give us like the top five positions right now in your portfolio. I know Tesla is obviously, maybe it's still 50%, maybe it's less now. What are the top five
It's less.
positions?
So, top five positions, total portfolio, or you want to just know individual stocks?
Individual stocks. Actually, you know
Okay.
what? Let's throw in just to see what you have in there as some of the largest holdings. If you have ETFs now that are
Yeah.
up there.
So, in my retirement accounts, I used to trade a lot in there. Um, they've grown quite a bit because of my trading, which is with Tesla. Like for example, Tesla will drop to $80 a share in 2022, and I literally sold everything in my portfolio and bought Tesla, and wrote it up. So there was some things that were strategic, like I said, but it wasn't until end of 2021 that I was really like grasping that. Um, so when the market was crashing in 2022, I sold everything, put into Tesla. As soon as Tesla went to like 220, I sold. And I thought I was a genius, but clearly not, right? Because now it's at 400 and back to 300. But besides the point, you can't really time the market, right? Like I've had pretty much a lot of experience and a lot of time into Tesla, and I thought I could swing trade it, but I'm not. It's hard to time it, you know. So ultimately, my portfolio right now, I've structured it to where I don't have to think about it, right? I have a business right now, and a lot of my time goes to that. I also have a family, so whenever I'm not working on my business, I'm with my family. I have three kids and a wife. So my portfolio is structured where majority of it is in VU, right? I would say probably like 20% of the total portfolio is in VU, and then another 15 to 10% is in SCHG. I want that growth. And I have like a minuscule amount in the SCHD, the dividend fund,
Sure.
right? I know a lot of people probably criticize that one because it hasn't been growing, but I think it'll perform well soon. And then my individual holdings, I got Tesla, Google, Amazon, Hood, which is Robinhood, um, and Disney. I think I've been buying Disney at $80. You know, I'm hoping that it comes back up.
I think a
Yeah.
lot of investors are hoping Disney comes back in soon. It has before in the
Yeah.
past. I wouldn't be surprised, and it's a matter
Yeah.
of time. It really is. Now, David, I want to go ahead and construct a portfolio with you here for this next question. A lot of people feel that when they enter the market and they start investing, the best way to go about it is to build this big portfolio, dozens and dozens of stocks. Then there's others who, on the other hand, say no, just stick to maybe 5 to 10 or 15. What's your take on how to actually construct a portfolio? How many positions should be in there? Should investors be focusing on? And how do you structure the portfolio in and of itself? Like you have ETFs and individual stocks. How do you know, kind of what puzzle pieces to put in?
So when it comes to position count, it's super important to continue to do your research, right? I used to have a ton of positions like Andre Jig. I'm sure maybe you yourself in when you first started investing, you had a ton of
Andre
positions.
Jake got me too, man.
Yeah,
I
I think he
I
still has
saw
all
his
those
portfolio. I
positions.
was like, that's what I got to do.
Yeah. Um, but then I started realizing like it's basically doing what an ETF is doing, right? Um, and I did more research, right? I was listening to Warren Buffett a lot. I was reading a lot of what he does, and which led me to Bill Ackman, which is my favorite investor right now. And I was listening to his podcast with Lex Friedman, and he was talking about how having a concentrated portfolio is already diversified enough. If you have a stock in each sector, I mean, you're basically gonna perform as good as S&P 500 or outperform. There's a chance you'll underperform, right? But the chances are kind of slim. Um, which led me to review my portfolio because when I watched that video and I was reading more and more Bill Ackman, I was reading the books that he recommended, um, and I had 20 positions at the time, and I loved every single stock. I'm like, but I want to own these, right? I really want to own them, and that was an emotional attachment which an investor cannot have, right? Um, so then I started selling. I'm like, what are the real winners? What are the real companies that I foresee will outperform Tesla? I mean, I know there's a big major fan base, but they continue to create new avenues for revenue. I mean, we're talking about robotics, and I think people can't even perceive that even happening, right? Having robots in our house doing our chores. Uh, Amazon is doing the same thing, but in their facilities, right? And then we have Google. I mean, I don't foresee YouTube ever getting disrupted, and that's another thing. I mean, um, I was just looking through my portfolio. Which of these companies have a moat and can they be disrupted? I don't see Amazon getting disrupted ever. Um, Disney probably could get disrupted. It's probably getting disrupted right now from Universal, right? But yeah, ultimately, I trimmed it down to 5 to 6 positions. I used to have more positions, like 8 or 10, and then I trimmed them down even more because I wanted to hone in on my winners. Like Warren Buffett says, your first idea was your best idea. And Tesla was my first idea. Yeah,
That's powerful. Your
yeah,
first idea is your best idea. Wow. It's funny because everything you just shared, honestly, there's a videos on everything you just shared on my channel from Bill Ackman, and what he shared, and actually very similar story, which was in 2020. I built this crazy, dividend portfolio. I
yeah.
saw an interview that Bill Ackman did where he said, when you take a look around in the market at any given time, there's really only a handful of incredible opportunities, and all the other ones are just average. So why don't you just try to find the top 5 to 10 most incredible opportunities? And I go, wow, like that's so spot on. And that's where the big shift took place for me. Now I want to ask you because this is also interesting. You've been doing a lot of selling over the years too, which has really helped you. I mean, you sold out of all your positions to overload the boat on Tesla. And then I loved how you shared, you can't be emotional with your stocks. AKA like you can't get married to these stocks. At some
hmm
point or another, if you need to pull the sell trigger, you need to do that. So talk to us about selling stocks. How do you get rid of or ditch rather the emotional attachment? And how do you know when it's time to sell?
So I used to be very emotionally attached. I would check my portfolio probably every 2 minutes. Like actually, it was an addiction, and I would say investing is an addiction. And I think I've seen you talk about how you are addicted to investing. It's your hobby essentially. I would say this is also my hobby, and I prefer it over my business any day. Prefer it over real estate. Um, but how do I know when to sell? I haven't got to the point where I feel like I should sell a company. Like I've thought about it with Disney. They have an immense amount of debt. Their their leadership is just not there right now. They brought back the dividend, and I didn't think they should bring back the dividend. I know Nelson Peltz really wanted the dividend, and that's probably why they brought it back because they didn't want him to get a board seat. Um, but I don't think they should have brought it back. I think they should have paid down their debt. Um, and I've considered selling that position, but I guess that's the one stock I kind of am a little bit emotionally attached because I take my family quite a bit to Disney World, um, and I just really want to own the company while I'm there enjoying it. But yeah, I have considered selling Disney recently because of high amount of debt. The streaming service is barely breaking even, and they have quite a bit of subscribers. Um, that's the only stock I've thought of selling. I've never thought of selling Google. I'm not concerned about AI disrupting search. I haven't thought of selling Amazon either. Tesla, I don't think they're ever going to get disrupted unless their competitors are just having a better product, right? So yeah, the stocks I'm in, I'm pretty comfortable in holding them. This past week, I know you and I kind of discussed the market's red, taking advantage, right? But it's not like I'm seeing how much am I down. I don't even think about how much I'm down. Like in reality, down a lot of money, right? The amount of money I was down is probably someone's salary. Um, but I'm not thinking maybe I should sell. uh, I'm more thinking like you, where we got to take advantage of this. And I'm not. I haven't really thought about it honestly. It's just more like let me dump money into this. I like them long term, and I think everyone needs to think long term. Um, there's this tweet that Elon had posted. Investing is not really that hard. All you have to do is buy companies that you really enjoy, which is part of my thesis, and don't look at the market.
Harder said than
Yeah,
done.
yeah, I know.
Would you say that is in fact like the secret sauce though to generating wealth is just buy and do not look at the market? Because
Hmm.
I'm just going to throw this back your way. You just shared, when it comes to Dizzy, I mean, Nelson Peltz and a board seat, and some investors out there may be saying like, "What board seat? Who's Nelson Peltz?" Right? They might be asking those questions.
Yeah,
Now that tells me that you're a learned investor and that you're actually invested in the companies, knowing what's
yeah.
going on versus knowing the ticker symbol and the price points.
Hmm.
How much should an investor actually be, quote unquote, invested into these companies, knowing who's up for a board seat, why the stock is, fluctuating on the day to day? Is that
Hmm.
important?
Um, Depends on your emotional attachment, I guess, like what we mentioned earlier, right? So if you're insanely emotionally attached and you really need that money soon to buy a house or pay for a procedure, then I probably wouldn't even be in the market, first of all. But um, should you be super involved in the company? It depends. I mean, it depends on your outlook. How long are you trying to keep your money in the market? Is it a short-term trade? Then maybe I would care. But if it's a long-term trade, then I wouldn't care. But in my opinion, I guess the way I invest is as I gather new information, then I make different decisions, right? Um, I mentioned Nelson Peltz because I eventually would like to get enough shares to have a board seat on Disney, personally. I see how many shares the CEO has, which is Bill Iger. He has 10 million shares, and I think that's doable, right? Um, so I guess I was following all these things because I eventually want to get a board seat. That's my goal. Yeah,
I think it's one of the most powerful things any master of the market, guests I've had on has ever
yeah,
said. Because something I'm really big on, and I don't know if you've heard me share it before, but becoming the CEO of your own life, so to speak, which means like if you're going to invest in a company, you really should be, first of all, knowledgeable in that company, as you were sharing earlier. But most importantly, I feel like you should want to sit at the round table at that with that company, with the executive board,
yeah,
with the board members,
exactly.
because otherwise what's the point of investing, right? Like I genuinely have an interest in every position that I own, but is that even important? Should investors be thinking like us, or is that kind of just something on the
I
side
th-
that
I
we
think
genuinely have an interest in business?
I think maybe that's just like our interest. I think some investors could probably do well without even caring about that. Like, I don't know. Are you familiar with Dumb Money?
Yes.
Chris Camillo? So he has a social arbitrage strategy, which I completely agree with him. Right? I think he's clearly proven that it's a true thing and you can make it work. Um, but I don't think he really cares about who's the leadership there, right? But I don't think he's also a long-term investor either. He's a trader. Um, in my case, since I'm a long-term investor, I want Disney to succeed. I kind of do care about the leadership. It's just, I guess it really depends, like your goals. I mean, if you're just investing into something because you want to do fire and you want to live off that investment, then that's completely different than you want this company to succeed and you want to be a part of that success. And I guess that's where I'm coming from. Like I want to be a part of the success in my own company. Since we deal with Medicare and Medicaid, I have to worry about bills. I have to worry about lobbying. I was just in Austin, like I mentioned to you offline. I was in Austin lobbying because um, we're trying to get increases while Doge is actually trying to cut, right? Uh, so it's kind of funny. I love Elon, but I also have some risk there, right? um, but I even told the team like, hey, I know I'm young, but I want to be on this government affairs board because I want to be a part of writing these bills. There's a lot of bills that we don't even know what's involved in them, and I want to be a part of that to make sure the best interest of the taxpayer is there, and also the best interest of the patient. Right? There's two things being involved there, and I guess that comes back to me as an investor. If I want Disney to succeed, I feel like I need to be a part of it. and ultimately I need to get enough money to get a board seat at some point.
You went from drinking beers in college and hanging around to avoiding fees to now literally becoming a business owner and a standout, I feel, investor,
Mhm.
someone who's just very well rounded. I want to ask you, how much has becoming a business owner, literally a CEO, helped you as an investor?
I've learned a lot, right? I can't. I guess initially, when you're a young male, you can let people get under your skin, right? And I've learned over the long term that you kind of just gotta bite the bullet and deal with those emotions to yourself, right? Or stick to those emotions yourself. And usually, I don't really talk about things that are going on in the business or struggles I'm having with employees or staff or bringing on staff, right? There's a lot of struggles when it comes to that, especially in a competitive job market. Um, so I've learned maintain your emotions, right? Another thing is no one's going to do it better than yourself, honestly. So everything that gets done in my life is because I have to do it, right? No one else is going to do it for me. No one's going to put it on my lap. Um, and no one's going to care as much as you, honestly. And there's this thing that my dad told me a long, long time ago, and it stuck with me since then, is that don't tell anyone what you're planning in life. Don't tell anyone that you're succeeding because they'll either hate you for it or they don't care. They don't care, you know. And I think it's kind of true. You know, it's kind of funny that I'm even mentioning my portfolio with you, but it's because your viewership is different. You know, they're interested in learning. They want to do investing themselves. Um, but it's been true in the business also. You know, I don't really talk about the aspirations I have. You know, I want to be statewide. I don't want to just be in just my region. Um, Eventually, I do want to sell. You know, I don't foresee myself in this forever. Another thing I learned is having a plan, right? A roadmap of where do you see this business going? Do you have plans of selling it? At what multiple do you want it at? What price do you want it at? How do I get there? You know what I mean? Um, and, you know, in order to get all these things done, you need to set short-term goals, or else you're never going to get there. Um, but those are the things I've learned in business. Try to never burn bridges because they'll bite you in the butt. So, you know, simple things, but I think uh, taking them at face value is different than actually being in it. And I'm sure
Yeah.
you're learning a lot as a YouTuber, right? I've my goal is to become a YouTuber eventually. I would prefer to be in your position right now.
Look, every I feel career comes with,
Hmm.
it's good chips
Challenges.
and bad chips, if you will, and challenges
Yeah.
exactly. And the reality is this. I mean, it's been such an inspirational, 56 minutes, 57 minutes by this point, and just you brought so much knowledge to the table. I want to ask you if you had to narrow it all down to the biggest mistake, or we'll go with the most common mistake, which is what I typically ask guests on the show that investors are making and that they should absolutely avoid, what would that mistake be?
Investing in the stock market, selling. That's the biggest mistake. Not only you might be selling with potential gains being left on the table, but you're also creating a taxable event. Or if the stock market's down, you're selling and you're actually losing money. You're realizing those losses. So selling is like a big no in my book.
So if you were to go back in time, that would really be the thing that you would tell yourself. Just don't sell, just
Oh
keep
yeah,
holding.
my net worth would be like multiples right now.
But you had to
Yeah.
sell to get the Tesla shares.
No, so I sold a mutual fund to get into Tesla, and I was selling things around my apartment to get into Tesla,
Wow.
and I was doing side gigs to get into Tesla. Uh, the reason why I did sell Tesla was because I was paying for a wedding, very expensive wedding, paying for a very expensive car, which was a Tesla also, which major mistake. Um, Other reasons why I did sell was emotional, right? And that's how I learned to not be emotional because I did get emotional. I've experienced it myself. Um, Same thing with Bitcoin. I sold Bitcoin at the top. I got lucky though. I didn't plan it. It was just so happens I had a lot of expenses also. Um, and I also gambled one away, the whole Bitcoin at the time, which was a major mistake.
I was going to say, how's it feel now?
Terrible, but
Yeah.
when Bitcoin was hitting 15K in 2022, I dumped quite a bit of money, and so I'm sitting pretty nice right now.
Yeah, I was
Yeah,
gonna say that it's always the pain of regret, of doing making a move and you look back but you only connect those dots looking back. So again, hindsight's
exactly.
2020. I have
Yeah.
one last question for you, David. I'm excited to ask you this one. If I were to
hmm
give you right now $10,000 to invest into any one particular investment, I'll let you go anywhere you want with it, even if it's in your own business. Where would you invest that $10,000 and why?
I would invest that $10,000 in myself. So if I didn't know anything and I was able to save up $10,000, I would buy a course, whether that is getting a real estate license or whatever it is. Um, the more knowledge you have or the licenses you have a bigger shovel to then invest in the stock market, real estate, whatever it is. But a minimum wage job is not going to get you there. You know, I know Dave Ramsey, he says that if you budget, invest 50%, you'll get there. But a lot of times he also says you need to increase your income, right? There's also income problems. So that $10,000 I would invest in myself, getting more licenses, learning, maybe getting to groups, because also the people might even lead you to potential deals because, like I mentioned earlier in this video or podcast, um, if you don't know it's possible, you're never going to do it, right? So I think taking that $10,000 to gain the knowledge is super important. If you don't have the knowledge, you're never going to get to where you want to be. And I know a lot of people say like, "Oh, I want to become a millionaire." The goal or the ease to getting to a millionaire or $1 million portfolio is a lot easier than you think. All you have to do is just continue doing what you're doing. All your listeners on here, continue adding to your portfolio, and you will get there. The $1 million portfolio is easier than you think, and it's going to come a lot sooner than you think. Just continue, let it ride.
This has been one of the most powerful and inspiring Masters of the Market chats that I'm popping off of. And I just want to thank you personally for joining me for this Masters of the Market chat. Investors, I got to let you know that David has his YouTube channel, which will be pinned down there in the pinned comment and in my description. So definitely go over to David's channel. He also has, where I found him, an X account. So that will also be down there. David, I want to thank you again for joining me, and to all the investors out there, until the next go round of Masters of the Market, we will catch you all there.